When the cost is reduced, profit will be more. So depends upon how the expenditure has been made on a particle. As a whole, it will give what's the profit at the end of the year or what's the loss at the end of the year. Opening stock of finished goods minus closing stock of finished goods, it is called cost of goods sold. 1,68,006.72. This becomes the cost of production for how many units? 25,000 units. Hello my dear students, I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Cost Accounting, 3rd semester, Unit 1, Session 1 in favor of BCom, Introduction to Cost Accounting. So, I am going to talk the concept of cost accounting today with a specimen of a problem, and we'll solve one problem of the specimen, an introduction to cost accounting. So, what is actually cost? The total expenditure on a product is called cost. The expenditure may be direct expenditure or indirect expenditure. Then what is costing? About cost accounting, the technique of finding out the cost is called cost accounting. So what is cost? The total expenditure on a product is called cost. The expenditure may be direct expenditure or indirect expenditure. What is cost accounting or costing? The technique of finding out the cost is called cost accounting or costing is considered. So we'll move on now. Agenda, cost accounting, difference between financial accounting and cost. This is important from the examination point of view. Format for specimen of a simple cost sheet, format for specimen of a complicated cost sheet, problems and solution on cost sheet. These are all we're going to cover in this session. So first is, what is cost accounting? Difference between financial accounting and cost accounting, format for specimen of simple cost sheet, format for specimen of complicated cost sheet, problems and solution on cost sheet. We'll move on to the format now. What is cost accounting? Cost accounting is the process of accounting for cost which begins with the recording of cost and ends with the preparation of statistical data for cost finding, cost control, ascertainment of profitability, and internal recording for managerial decision. We'll find out the cost. For a cost called profit will be added, that is the selling price, and it helps the internal recording of managerial decision. So any decision taken by the manager based on the cost of the article. Assume that the cost is 90, 10 rupees is the profit, 100 is the selling price. If the cost has been reduced to 80, 80 plus 20 is equal to 100. When the cost is reduced, profit will be more. So depends upon how the expenditure has been made on a particle. The expenditure may be direct expenditure or indirect expenditure. So this is called preparation of statistical data for cost finding and cost control. This is important. Cost control is important to ascertain the profitability and internal recording of managerial decision. Then, difference between financial accounting and cost accounting. So, this is important. Financial accounting, cost accounting. We will go one by one. It is regarded as the mother of science. Financial accounting is considered as the mother of science. It is regarded as daughter of science. So, main is financial account is considered a mother of science, whereas cost account is considered a daughter of science. Second one, it covers all the financial transactions of a concern. Financial accounting record all the financial transactions of a concern. It covers only those transactions connected with the production and sale of goods, not all. Only production and sale of goods. It covers all the transactions. Now, it is primarily concerned with the ascertainment of profit or loss and financial position of the business. So, the major goal of the financial accounting to find out the profit, financial position means the balance sheet. We say that how much asset we are having, how much liability you have to pay, how much capital is arriving. So financial position means assets and liability. In accountancy, asset minus liability is equal to capital. That we are going to deal in financial accounting. But here, it is primarily concerned with the determination of cost of products or service. It is going to find out what is the cost of an article. Here, no profitability. Cost accounting gives a more important. They throw a light on how to find out the cost. What is the cost of this article? It will stop there. Then it will go to the service what called sales department. They will add the profit. Then we can find out the total cost plus profit should be added, becomes the sale. Here, the major goal of the financial accounting is to find out the profit or loss and the financial position of the business. Next one. Imputed or notional cost like rent of own premises are not included. Here, in financial, rent of the own premises not be included. Like rent of own premises are not included here. Imputed costs are included here. Where it is rent is not included, here costs are included here. It deals with the total expenditure and not with the expenditure incurred on individual product. It deals with the total expenditure, not the individual expenditure. It allocate and apportion the total expenditure to various products. Each item will have been allocated here and helps in ascertainment of cost. In order to ascertain, they will apportion, allocate all the expenditure to each product. Various items of cost are expressed only in total. In total, we'll express what are the cost or expenses. The items of cost are shown not only in total but also per unit also you get care. Here per unit we won't say overall, we say what's the total cost. Here we'll find out the total cost also, we'll find out the cost per unit also. It discloses the profit or loss of the business as a whole. As a whole, with not an individual, as a whole it will give what's the profit at the end of the year or what's the loss at the end of the year. But it discloses not only profit or loss of the business as a whole, but also profit of each activity. Each unit is going to find. Here, we are not going to find it's only whole of the business here. Here, we are going to find out each activity. Each item you are going to find out. Then, it do not provide sufficient data for inter-period and inter-firm comparison. There is no chance of inter-period or inter-comparison in financial account. But it provides adequate data for inter-period and inter-firm comparison. We can easily do inter-firm comparison in cost accounting. It is not possible in financial accounting because it is going to make entire firm, whereas it is made individual, what's called separate each department we are going to find out. So that it is easy for inter-firm and it provides inter-firm and inter-period comparison. Stocks are valued at cost or market price, whichever is lower. In financial account, the closing stock will value either at the cost price or the market price, whichever is less. How it will value? The closing stock will be valued either as the cost price or the market price, whichever is less or lower. Stocks are valued at cost price only, where in costing, stocks are valued only at the cost price, not at the market price. Whereas in financial account, stocks are valued either at cost or market value, whichever is less. Then, it deals mainly with the actual facts and figure. It takes only actual facts and figure will be taken into consideration, where in financial accounting. It deals with actual facts and figure as well as estimate also taken into consideration. In costing, we'll make the estimation also, whereas in financial account, the question of estimation does not arise at all. Only actual facts and figure will be taken. Here, actual facts and figure also taken and also estimation is also made. This is the most important difference. Now, before preparing the cost sheet, total cost of an article, you have to know the specimen. So, its specimen goes direct material, direct labor, direct expense is the prime cost. What's the prime cost? Direct material, direct labor or wages, direct expense is the prime cost. Add factory expense is called factory cost or works cost. Add office and administration expenses, it is called cost of production or office cost. Add selling expenses, it becomes the total cost. Add the profit, that becomes the selling price. How the forward goes? Direct material, direct labor, direct expense is the prime cost. Add factory expense is the factory cost. Add office and administration expense is the office cost or cost of production. Add selling expense is the total cost plus profit is equal to selling price. I will repeat once again how it cost specimen goes. Direct material, direct labor, direct expense is the prime cost. Add factory expenses become the factory cost. Add office and administration expenses become the cost of production. Add selling expense become the total cost. Add profit is the sale. This is a small specimen of ordinary specimen cost sheet, or we can say that simple cost sheet. Go with a complicated specimen of a simple complicated sheet. Is a complicated cost sheet, we say. How it will go? Material consumed. We say direct material, no, it will be opening stock of raw material plus purchase of raw material plus carriage inward minus closing stock of raw material is material consumed. Add direct wages or labor, add direct expense become the prime cost. Here I will repeat. What is direct material? Opening stock of raw material plus purchase of raw material plus carriage inward minus closing stock of raw material is called raw material consumed. Add direct wages or labor, add direct expenses become the prime cost. Add factory expenses, add opening work in progress minus closing work in progress minus sale of scrap. Whatever we get here is called factory cost. Factory expenses is this. When I add to this, no, for this will be added. This become the factory cost. Then add office expenses becomes the cost of production. Add opening stock of finished goods minus closing stock of finished goods. It is called cost of goods sold. Add selling expenses, total cost of sale. Add profit becomes the selling price. This is little bit complicated cost sheet. Whereas first one is simple cost sheet. What is material consumed? Opening stock of raw material plus purchase of raw material plus carriage inward minus closing stock of raw material is raw material consumed. Add direct wages or labor, add direct expense become the prime cost. Add factory expenses, add opening work in progress minus closing work in progress minus sale of scrap, and add this become the factory cost. Add office and administration expenses become the office cost or cost of production. Add opening stock of finished goods minus closing stock of finished goods, that is the cost of goods sold. Add selling expenses become the total cost plus profit becomes the sale. This you have to learn. We'll go to problem according to this. So this is a problem. First problem, very simple problem. Opening stock of raw material, carriage inward, closing stock of raw material, purchase of raw material, office expenses, closing work in progress, direct wages, direct expenses, opening work in progress, factory expenses, closing stock of finished goods 11,000 units, opening stock of finished goods 6,000 units, selling expense rupees 10 rupees per unit sold per unit, whereas sales per unit is 180. You have to prepare the car. What's your output? 25,000 units. When the output is given, you have to calculate cost per unit. Cost per unit you have to calculate. Raw material consumed, this is your heading. Opening stock of raw material plus purchase of raw material plus carriage inward. If you add, it becomes 16,96,000 minus closing stock of raw material 2,96,000. It becomes 14 lakh divided by 25,000 units. Per unit comes to 56 rupees. Add direct wages 12 rupees divided by 25,000, it becomes 48. Add direct expenses becomes 60,000. If we divide, it is 2 rupees 40 paisa. If we add this now, it will come 26 lakh 60,000, 106.40 per unit. This is the prime cost. Add factory expenses 4 lakh 72,000. Add opening work in progress 56,000 minus closing work in progress 40,000. If we add, it becomes 4 lakh 88,000. 19 rupees 52 paisa. This one 26 lakh 60,000 plus 4 lakh 88,000. It becomes 31 lakh 48,000 plus 106 plus 19. It is 125.92 per unit becomes the works cost. Add office expenses 1 lakh 68,000 per unit 6.72. This is for 25,000 units. 33 lakh 16,000 132.64 per unit. This is the value for how many units? 25,000. Add opening stock of finished goods 76,000 for how many units? 6,000. It's also finished goods. It's also finished goods. 25 plus 6, 31 units. Minus closing stock of finished goods 11,000, 1,60,000. So it becomes 32,32,000 for how many units? 20,000 units. It becomes 161.60. From this, if we deduct, it becomes 28.96. Add selling expense they have given per unit how much? 20. What your sales you made? 20,000. 20,000 in 10 becomes 32 lakh. If add, it is 34 lakh 32,000 171.60. Then they have given the selling price 180 multiplied by 20,000. It becomes 36 lakh. From the 36 lakh, deduct 34 lakh 32,000. It becomes 168. From 180 deduct 171.64, it comes to 8 rupees 40 paisa per unit. Opening stock of raw material, add purchase of raw material, add carriage inward, it being 16 lakh 96,000 minus closing stock of raw material 2 lakh 96,000, it becomes 14 lakh. Add direct wages 12 lakh, add direct expense 60,000, it becomes 26 lakh 60,000, 106.4. Add factory expenses, add opening work in progress minus closing work. If add these three, this one, it becomes 4 lakh 88,000. Add to this 31 lakh 48,000, 125.92. Add office expenses 1 lakh 68,000, 6.72. This becomes the cost of production for how many units? 25,000 units. Add opening stock of finished goods 6,000, 76,000 minus closing stock of finished goods 11,000, 1,60,000. It becomes 28.96. Totally for cost of production 32 lakh 32,000. It is 161.60. If we deduct, it becomes 28.96. Add selling expenses per unit 10. It becomes 2 lakh. It becomes 34 lakh 32,000. 171.60. Add, they have given the selling price per unit 180 multiplied by 20,000, it becomes 36 lakh. If we deduct now, 1 lakh 68 is a profit, whole profit per unit becomes 8 rupees 40 paisa. Hope you understand this. No, this point should be remembered. For 26 lakh, this 4 lakh 72 plus 56 minus 48 becomes 4 lakh 88,000. If you add to this 31 lakh 48 125.92. That you have to remember. Hope you understand this. Very, very simple cost sheet I have explained. And also this difference is most important. This is most important. It is regarded as mother of science. It is regarded as daughter of science. It covers all the financial transaction. It covers only transaction relating to cost of production. It is primarily concerned with profit or loss and financial position. It is primarily concerned with the determination of cost of production. So rent of own premises are not included here. Input of cost are included here. It deals with the total expenditure of the entire unit. Here it allocates the expenditure into each department and each unit is concerned. So this will definitely come from the examination point of view. I have given specimen of the cost sheet complicated specimen of the cost sheet, and also a simple difference between cost account and financial accounting. A problem of this complicated cost sheet has been solved. Hope you understand that. You go through it. Definitely it will help you. The difference between cost account and financial definitely will come from examination point of view. The cost sheet is most important. We filled up the format. According to format only I work out. Thank you. We'll meet in the next session with another problem. Till then, goodbye. Meet in the next session.